Hey, it's Dennis the Laptop Trader here with you. So, I had a request come in to do a video on correlations on stock indexes and currencies and how they affect. So what I wanted to do really is just start off by actually looking at a few theoretical examples. And we're not talking about economics here, we're just talking about, logic. So what I wanted to really think about is first of all, let's think of a country, and I, for instance, wanted to think about the USD and Japanese yen. That currency pair came to mind because I wanted to kind of isolate a currency pair that was not really affected by too much political and financial problems that are currently being experienced. For instance, the euro, there's a lot going on there, so just kind of wanted to look at something that could be perhaps a little bit more isolated. So if we're thinking of an economy or a country, and we will be using the stock index as a proxy for the indication of how a country and this economy is doing. So if we think about it, if we say that we have a country that's doing well, and if it's doing well, it's going to be selling more goods, right? So it's going to be selling it within its own country, and it's going to be possibly maybe selling outside of its country. So therefore, the companies, the larger companies within that economy, are going to be selling more goods, meaning that their stock or their share prices are going to go up, meaning that the index of that country. So if we're talking about the Japanese yen, where the Nikkei is the index within the country. So if the stock market goes up, the economy is doing well, and therefore, if those big companies need to export more or buy more at the same time, then there's a greater need for the that currency pair, meaning that there's a lot more transactions, so there's a lot more demand of that currency pair. So therefore, the currency should go up. Okay, so we see a positive relationship. Alright, now the other thing that I really wanted to talk about is, do we have any exceptions to the rule? I'm just thinking with common sense really, and by that I mean, when does this relationship really start to break down, or when would be at least one exception that the country may become too strong, perhaps? So that's why we have the picture of Arnie here. Okay, so it's getting a bit too strong. So if we think about it, if a country is doing extremely well, and those companies that were previously selling abroad or importing, then they might, because they want to carry on growing their balance sheets and stuff and so on, they might want to start charging a bit more, right? And that would increase their sales and revenues and profit in turn. Or if the currency pair goes up, like it would do if the stock index goes up, that means the other countries may simply be not able to afford as much as they could before. So this comes to the point that if a country gets too strong, perhaps, so if we put, like, say, a triple increase in the stock index, perhaps, and I'm not sure, this is just me thinking out loud really, the currency pair may start to not know what to do. I don't know. This is, to me, this is an interesting theoretical question, is that, obviously it's going to start hurting imports or exports a little bit more, and perhaps we're going to start seeing a little bit more of a breakdown. Yeah. So what the whole point of this exceptions part is to really make you think about that it's no good just taking something for a fact. Correlations do break down, and hopefully we'll see that. It's all well and good talking about theory, however, I'm a bit more of a practical person, so let's jump into the platform, and what I've done is I've prepared the Japanese Nikkei index on top, and I've prepared the USD JPY pair on the bottom. Okay, so now the idea is this: I've lined them up. This chart, the top one, doesn't actually physically go back further than this date provided, and this one likewise. However, to line them up so that we don't have a biased view, is I've taken an arbitrary date and I've lined them up the same. Okay, so my idea was this: let's just start drawing some trend lines, and then afterwards we'll see what the picture brings us. Okay, so if we look at the Nikkei, and we get the trend tool out, so can perhaps like that, maybe, and then we might have a trend line coming up here, and we might have something like this. Okay, so let's just carry on. Let's just see what we get here. So down to the bottom here, doesn't want to go. Come on, too far. All right, and perhaps even another one here. Might be seeing a breakdown of this at the moment. And alright, so done the Nikkei. Now let's have a look at the bottom chart, the USD JPY. So we're just going to go from this date, alright, so to get the same sort of picture. Okay, so there's actually a head and shoulders here, isn't it? So anyway, don't need to be too perfect with these. Could draw something like that. So 1, 2, 3 touches, not too bad. Like I said, we don't really have to be perfectionists about this. All we're doing is just trying to marry up the points together to see if we can make sense of all this, really. So we'll carry on doing that. It shouldn't take too long. Okay. Okay. Alright, now the trick to this to this analysis is really that this is a USD JPY chart. Okay, it's not Japanese yen USD chart. It's so when we see the trend lines going the same direction, that means that the stock index and the currency pair is actually acting in reverse. So for instance, here the Japanese Nikkei was depreciating or losing strength, meaning the economy has gone down, and that means that the USD has appreciated against it. Okay, so that's a positive relationship, just like we saw here. Okay, so you kind of have to think in reverse a little bit about this. So what we will do is, when we have the trend line going in opposite directions, i.e. positive correlations, we'll leave them the same color. And when we start to get divergence, i.e. they're going the same way, meaning that we get an inverse correlation, I will actually just label them a different color. Okay. Now let's have a look. So we've got a opposite, so that means positive. Okay, good. We have a opposite here, so yeah, okay, more or less. Okay, fine. We have and we're starting from here. From about here, actually. I don't know, somewhere around here. I won't want to be too precise, but anyway, let's get this side, and we're actually starting to see the lines, the trend lines, going the same direction, meaning that is this when we have our somewhat of a inverse or a non-positive correlation? I don't know, but it certainly looks like that. And then if we carry on, we'll start seeing that this line, this trend line, goes down, and they're going the same way. Okay, so perhaps the market crash, the 7 and 8 market crash, actually caused this correlation to carry on going. Okay, so it looks like from 2010, this is a no-go. So meaning that we might actually, the currency pair is not reacting too well because it's not really a great trend line anyway. So this is where it doesn't know what to do. Oh, I forgot, we have to change the colors, don't we? So if we put them to say red, and if we say up until here it's red as well. Well, actually, we'll leave it there first. And we'll change that to red as well, inverse. And what are we seeing at the moment? They're going the same direction, so they are still, let's just think about it. The Japanese Nikkei is going up, meaning the economy is getting stronger. However, the currency pair is actually depreciating because the USD is much stronger against it. And we can see that this trendline break is actually, it's quite funny because it looks exactly the same. Even this break and this zigzag, the in and out, it's exactly the same. So, like I said, don't take theory for a fact. This is, correlations are a changing variable. So if you like the video, just hit like or subscribe to the channel. We're going to have a lot more videos coming out. And how you can get involved is simply just add me on LinkedIn if you haven't already. And yeah, just tag me in any comments or post or just PM me really. Okay, so thanks a lot for watching. See you soon.